Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now today's episode won't be super popular, but it is super important, and that is how do Uncle Sam taxes play a part in our bank account bonus hunting adventure. So of course I'm going to break down everything you need to know. Of course, not tax advice because I think I have to say that, but we'll cover everything you need to know so you are prepared, know what to do with all those 1099 forms. Of course, if that sounds interesting to you, then go ahead, press the subscribe button, and let's get to work. Now, we're going to cover everything here from bank bonuses, credit card points, referrals in case you play it all, and we'll break down how it all works, and I'll tell you how I kind of manage it as well. So with that, again, we know the deal here. You sign up for your bonus, you do your debit card transactions, you deposit your money, and then eventually you get the money from the bank, and it's pretty cool. So at the end of the year, what's going to happen, we're in February, so what's actually happening now is you're going to get a bunch of forms from banks called 1099 forms. They're going to be labeled 1099 miscellaneous or interest, and that's kind of how the bank, breaks up the bonuses that you've earned. Is interest money, basically the easiest way to include it, or miscellaneous, like here's just money we gave you. Now, the overall rule is that for these 1099 forms, is that a bank, or anyone really, not just a bank, but we're talking about banks, if it's $600 or more, the bank is required to report it by giving you a form, and if you get a form, that means the IRS also gets a form. Anything less than $600, they're not required to send a 1099 for, but you are still required to report any and all income made. That's just kind of how it works. So just because you don't get one doesn't necessarily mean you're off the hook, though what you choose to do is totally up to you. So that's, in a nutshell, that's how it works. It's also worth noting that the banks have, I'm just going to say banks, but it's how it works in general. From January to January 31st, all the 1099s are supposed to be out the door, all the tax documents out the door. Now, this rarely works that way. So as a result, I tend to wait until, mid-February, honestly, or even closer to March to start plugging things in because you're still going to get documents coming through all the time. Now, there's another thing that's worth noting is that more often than not, if you've closed an account, three things could potentially happen. One, they could just deliver the 1099 to you in the mail. Very similar to if you've ever left a job, they'll mail you the 1099 versus letting you back into the HR system, which is never going to happen. But if you've closed an account, just because you've closed an account doesn't necessarily mean your profile is closed. So, you could still get a notification that says, hey, tax documents are posted, and you could still be able to log into that and pull down your 1099. I think that's what happens with Fifth Third, for example. Other places will send you like a separate, think of it like a Dropbox type deal. So like Chime just did this for me. They'll send me here, go log into your tax documents here, and you click this, and it's just, you log in securely, and it's just a list of tax documents from this year and the past few years. Now, if you've closed the account and, you don't get anything, well, sometimes it doesn't necessarily mean they didn't upload it. So if you really want to get all yours 1099s, you could potentially reach out to them and say, hey, I need a 1099 for this. I've never done that before. We'll talk about what I do at the end, but you could also do that as well. But also, if you've moved since then or you've changed your address and, you've closed your account or you didn't update it with them, it doesn't really matter. They'll send it to whatever's on file, and then if you don't get it, well, they can still document that they sent it to the address on file. So just be mindful of that as well. So that's a little bit about how the 1099s work. It's very simple. Just take it, you'll enter it into your tax software, whatever you use, or just give it to your tax guy and they can take care of it. So, how does this break down? What's taxable and what's not taxable? Well, we'll start with bank bonuses. Bank bonuses, as you're probably finding out, are taxable. And the way it's determined is if you remember back in the day when you get a cell phone and, you would cut off the back of the box, the UPC code, fill out a paper form, and you'd mail it away to the manufacturer, Motorola, whoever it was, and then maybe 8 to infinity weeks later, they would actually send you like a Visa debit card or a check as a rebate, right? Because that phone was always advertised as $200 with mail-in rebate. So you'd have to pay $50 at the store, go through the rebate process to get your $50 back. It was the dumbest thing in the world. I can't even believe we allowed that to happen, but the point is, rebates were based on you had to make a purchase to get the savings, right? You had to buy the phone to get the $50. That $50 wasn't really taxable, right? Bank bonuses, even if you swipe the debit card, it's a debit card, requirement. You're not spending any money to get the bank bonus. So really what they're saying is if this is basically interest income or miscellaneous income. So that is all taxable because there's no spend. The same with referrals. If you refer someone either to a credit card promotion or you refer someone to a bank bonus, right, you'll get 1099s for that as well. They kind of treat it as like, hey, maybe you were marketing for them or something like that. Now, it'll either be interest or miscellaneous income, one or the other two. I don't know that it really matters which one they send you, honestly. You might get two different 1099s, one for the bonus and then one for your referrals. I've seen that as well with mine. So be aware of that. That counts for brokerages, neobanks, regular banks, business accounts, you name it. Now, credit cards, on the other hand, since we're here, credit cards, rewards points, and sign-up bonuses, because you have to spend to get those points and those rewards bonuses or sign-up bonuses, those are not taxable because that's a rebate, so which is good there. But again, credit card referrals would be, considered a 1099, almost as if you're marketing for the company. So that's a little bit about how it works. Now, overall, the argument you always get is people like, like I did a bonus of $20 bonus, and you get some people like, is it even worth it? It's taxable. I still look at it all as it's free money, and yes, it is taxable, so it, could potentially push you up a tax bracket or something like that, increase your overall taxable burden. But I still think it's worth it personally because, again, it's easy money. It's money that you didn't have. I didn't really do a whole lot to get it. So even if it's a $20 bonus or a $5 bonus, I don't necessarily worry about it too much. Now, for me, I try to match up the 1099s as best I can to my bank sheet. And if I don't get one or I'm missing one in the past, what I've done is simply just made one giant line item for the remaining amount of money. Said good enough. I do that because I'm on the internet talking about it, so I'm not necessarily that big and popular, but it would be fairly easy for someone to just pause the video and be like, oh, this is all the stuff you had versus this is what you reported. So that's kind of how I've done it. This is the first year I've actually got a CPA. Now, I didn't get it just because I have a ton of 1099s. In my experience, it doesn't really take that long to enter in a bunch of 1099s. I got it because I do a bunch of other things, and more so because I thought, I'm probably leaving money on the table combined across all ventures than anything else. So I might as well just, suck it up and go professional. Plus, I think you can write off some of that stuff under like your LLC costs. So that's another story entirely. So that's kind of what I do overall. But, the tax thing is really not that bad. Additionally, you can pay your tax bill with a credit card, which I have a video on the other channel, the main channel that I will link down below for you where I did it. Now, historically, it's been 1.98% to pay for the credit card for federal, but I think one of them, these are Pay 10, there's 3 processors the government uses, and one of them, I can't remember the name off the top of my head, but one of them actually dropped for this year down to like 1.85%, which means you want to do a few things. You use your Citi Double Cash card, you use a card where, basically you can still live off of that margin, or you use a card like one of those hotel cards where if you spend a certain amount, you get a free award night or something like that, or just a card to hit a sign-up bonus. Now, local taxes are much different, like state taxes, those, for me at least, the processing fee is closer to 3%, which makes it less advantageous. At one point, I had to pay city tax as well, which is a whole nother story, a whole nother ripoff, but for federal, it seems to be fine paying with a credit card. I've done it. I'll do it again. But again, you're talking to the guy who, I'll do a $5 bonus. So yeah, if you're telling me I can do 1.98%, still live off that margin from a 2% card, of course, I'm going to take it. It might be at diminishing returns, but I think it's worth it because, it's still a little bit of a win, and it all adds up. So anyways, that's really all you need to know about taxes. Honestly, it's not that bad. Keep your eye out for those 1099s. Make sure you're updating your information. Make sure if you have your profile, set up with the bank, even if you closed it, you go and check it. Again, it's not a guarantee that they will send out a 1099. So just because you didn't get one doesn't mean they actually sent one. But again, you can kind of probably ask somebody who knows how to include this stuff if you didn't get a 1099. Again, I've just been making one line item. I don't really think that's right. But again, we're a little bit different because I'm on the internet talking about it, and you can still live in anonymity more or less. So anyways, that is how taxes work. You can ask questions. I will probably be very vague. Admittedly, I don't know much more than what we just talked about with it, but if you drop some questions down below, I will try to answer as best I can without getting us both in trouble somehow. But anyways, guys, that's going to do it for this one. So if you liked it, drop me a thumbs up down below. Of course, if you found it particularly interesting, consider subscribing to the channel. And if you want to make even more money, then of course, check out profitablecontent.com, where we have a bunch of bonuses that you can go after, easy ones to help even offset your tax bill even more, or try to, make it bigger, I guess. Either way, guys, thank you so much for watching. Talk to you very soon in the next one.